Hey guys, how's everybody doing? How's everybody doing out there? Jackson, how are you doing? Jackson just ran over to his food bowl to get some to go eat manically. So, all right, guys. Let's see what we have to talk about tonight. Oh, we have a new video to review. And I'm going to remember to share my screen. Tom's probably asleep. It's 11:30 in New Jersey. So if I don't share my screen, there's probably no one up this late to text me, but I have to remember to share it. And I did. There you go. All right. So here's what I have for you guys. I have a new Patreon, and I wanted to go through it today real quick. And then we can also talk about the market. This is going to be a regular edition of Late Night with Max and Jax. If you guys have questions, be sure to ask him. I brought a Coke. This time it actually is a Dr. Pepper because I was out of the sparkling water. I just felt like something to drink, so we'll just drink a little Diet Dr. Pepper. All right, guys. Let's check out this fund, Wild. Does anyone have this fund yet? Ticker is WILD. It is from Vista Shares. It's the name of it is Vista Shares Animal Spirits. What a great name. Animal Spirits 2X Daily Strategy ETF. It says here, the fund provides 2X daily exposure to the 5 most popular stocks based on buying momentum and investor sentiment, rotating monthly to capitalize on changing market dynamics. I really like this. Now, just let's look at my article, my Discord article. This goes out to Marcus. Marcus has been requesting this video for a while. Okay, first of all, Vista Shares, you guys might be familiar with them. They have a couple of other ETFs, one called Omaha, one called QUSA. We've talked about them both on this channel before. They both pay a 15% target and basically copy trade Warren Buffett. Vista Shares also has something called AIS, which is not income. It's just growth. So Wild goes along with AIS. Wild is growth. There's no income component. Whereas Omaha and QUSA are income funds and pay a 15% target by selling options. All right. So I'm going to say Wild's part of a new class of liquid alternative option-based ETFs. In the old days, it was the option strategies were based on one factor, selling at the money covered calls, just the most basic, one strategy, maybe one wrinkle would be a better way to put it. But then as things got more sophisticated, these ETFs came out and they had more strategy wrinkles. Like maybe they were, instead of buying the whole S&P 500, they just buy the best, with the manager's opinion of the best value stocks out of the S&P 500, the best 100 or so value stocks out of the S&P 500. And then sell options on the index. That's what JEPI, the tremendously successful billion-dollar fund, multi-billion-dollar fund from JP Morgan does. It's so that was an example of 2 factors. There's not really factors, 2 strategy wrinkles or whatever. Well, anyway, I'm going to talk about there's lots of these funds today that have 3 separate ones. Now, Wild is going to combine a couple of things. What Wild's doing is they aren't going to just passively buy a whole index. They're choosing out of the index the 5 best stocks. So that's strategy wrinkle number 1. And then number 2 is they're going to use leverage. They're using 2X daily leverage. Okay. Now these guys are using, they have I guess it's proprietary method on how they do it, but somehow they're judging investor sentiment and money flowing in and out of the stocks. Yeah, like it said, they change their allocations monthly. They own 5 stocks at a time. I wish they'd own 10. I don't see what the deal is with the 5 stock funds. But anyway, so like I was saying, this strategy, the strategy thing that you can narrow this down to 2. They use leverage and they use concentration plus leverage. Okay. This month, the funds that they're invested in are the ETF, or not ETFs, they're stocks that they're invested in are Super Microcomputer, Tesla, Facebook, Palantir, and MicroStrategies. And I was saying the Misty Mafia will be glad to know that Mr. is in this ETF. But of course, that could change. They change these monthly, so it'll be interesting next month to see what happens, see how they change. So I also wanted to mention that this strategy, Wild's strategy, is a similar concept to an ETF that we're already familiar with, that we talk about it on the show occasionally, FEAT, F-E-A-T. So FEAT came out December 17th. I remember the day because I bought it the day it came out, put it in the model portfolio. Well, the rest of the story is it's down 12% total return right now, and it's no longer in the model portfolio. But I liked the concept. I liked what the prospectus said, and I gave it a chance. FEAT was doing the same thing that Wild is going to try to do. FEAT is using a 5-stock technical analysis concentrated portfolio. But let me remind you guys, FEAT, in addition to that, they also sell covered calls. FEAT's a covered call income ETF from YieldMax. But as far as the stock picking part of it goes, it sounds pretty similar to what Wild does. I like this, though. There are some drawbacks with just trying to use technical analysis to stay in the hottest stocks at any given time. I mean, if it was easy, everyone would do it. We would just all stay in the 5 hottest stocks at any given time, but it doesn't work like that. It can. I mean, technical analysis does work, but it has some risk also. Well, their prospectus, I was trying to type out the risk on my own, but I just got the risk out of their prospectus, and their prospectus says exactly what I wanted to say. So it's called the Animal Spirits Strategy Risk. So Animal Spirits is what they're calling their strategy, but I'm going to say that's the strategy of using the 5-stock concentrated, switch to the hottest ones every month strategy. Okay, so they're saying the risk with that strategy, I'm just going to call it the risk with trend following strategies generally, is the fund's investment strategy of focusing on companies with strong investor interest carries significant risk. This approach may result in the fund investing in overvalued securities, as heightened enthusiasm can inflate stock prices beyond their intrinsic value, leaving them vulnerable to sharp corrections. The strategy is influenced by the herd mentality, which can lead the fund to participate in speculative bubbles that may collapse suddenly. Additionally, the strategy often involves a short-term focus with investments driven by fleeting trends or news cycles, increasing the likelihood of heightened volatility and unpredictability. The fund may also invest in companies that lack fundamental financial support, relying more on market hype than sustainable growth and profitability. There is significant risk of timing errors, as this strategy requires precise entry and exit points to avoid losses. Finally, because the fund strategy is based on a ranking process of companies with strong investor interest, the investment decisions may prove to be poor. Okay, at first I didn't get that, but they're saying, okay, this is based on investor interest, but then they're just making the caveat, investor interest could be wrong. I mean, in other words, you can crowdsource an ETF or you can use technical analysis or whatever, or let's just stick with the crowdsource. Let's say you crowdsource an ETF. That's great. Doesn't mean the crowd's always right, though, right? The crowd can still get it wrong. So in my opinion, all trend following strategies should come with a similar disclaimer as that paragraph I read you guys word for word. If you read that and you still want to invest, then you understand, that a lot of good things can also happen in trend following system. The prospectus doesn't have to disclose what can go right. It doesn't have to tell you that a stock can, anyway, they just have to tell you what can go wrong. So I like the idea of using Wild tactically, because remember, it is double leverage. It doesn't have income, but it's double leverage. So it could have a place where I might otherwise use TQQQ, or even a place where I might otherwise buy options. A person could buy Wild for a week. I don't know if Wild's going to have liquid options, but if Wild has liquid options, you could even sell puts on Wild. Anyway, we'll have to look into all that when it gets here. But I think Wild would have a tactical place, but because of the 2x leverage, for me, it's just going to be more for special situations. Of course, leverage isn't, no such thing as free money, and leverage gives you extra upside, but there's a cost, as you guys know. Or leverage can give you extra upside, but there can be a cost. Anyway, but this thing should be an upside monster. I mean, especially if we can get a trend that persists if we can get a trend like we had in last year that went for 6 months where the market just melted up, from January, February, March. It went down a little bit in April, but then May, June, July, pretty much, those good long 9 and 12 month without even a 5 or 10% retracement. Those are the kinds of trends that can really help a fund like this out. On the other hand, if we're in the type of market that traders would call a whipsaw, or, the market's whipsawing your trading system, you're getting whipsawed, meaning you're buying high and selling low because the trend following system's getting you in right at the exact high and then it's reversing. That just means the trend's not persisting. You're getting whipsawed. Anyway, like I say, discretion's the better part of valor with any of these high yield funds. And this isn't even a high yield fund. All right. So I have one more suggestion here for the managers of this fund. If they're watching, why don't you guys release this as an income fund? Okay. You can make it WLDY. I checked to see if the ticker's available. I don't know if it's available, but it's not being used right now by a fund that's out. Maybe you guys have already filed for this. This would be a natural, especially because you have Pestruccelli. Get him to throw some lightning spreads on top of your Wild concept. So here's what I would do if I was you guys. Do the Wild concept, call it Wild E, put some lightning spreads on it, sell some little put spreads in addition to owning the stock. You guys would be the first to market with the lightning spread, or actually, no, you won't. There was an ETF yesterday that came out with lightning spreads, BLOX. But anyway, but think about that. You could also do covered call spreads. You could do whatever. You guys know how to do this, but pay about a 20% target income selling lightning spreads, and you would impede zero of your upside. Because you still own the stock, you'd have full upside. All right? I think that's a natural. And I would buy that one the day it came out. I'm not going to buy this one the day it comes out, but I would buy that one the day it came out in a small proportion. It's leverage. It's going to be, a hot mess, but I mean, I'd be real interested in considering something like 5% of that in my portfolio with the best stocks, double leveraged, and selling premium on it. The premium's the key for me. So anyway, I don't know if these guys will listen to the video, watch the video. I don't know if they'll bring out one that sells premium. Maybe the premium selling space is too crowded. Maybe they think that maybe they want in more on just the leveraged upside space. I mean, and that's their, it's fine. Maybe I'll get a hold of these guys and ask them to be on the show. I like the concept of this fund. I'd like to talk to these guys more about their system. How do they measure money flow? It talks about investor sentiment and money flow. And how do they measure sentiment? Do they use the index? Is it they use AI? Anyway. All right, guys. Well, thanks for listening to that. Go read that. Go read that if you want. Leave me a comment or whatever. All right, let's look at the market. If there's anyone around, there's 8 of you here. Well, I really appreciate that. That's awesome. Hey, Marcus, this is for you. I'm glad you're here. I should have posted I don't know if I have your email, but I should have posted and let you know about it. But anyway, yeah, Wild's going to be something else. I mean, it's going to be like TQQQ on a hit of mushrooms or something, because TQQQ is the NASDAQ, triple leveraged. I mean, this is going to be the 5 hottest stocks from the NASDAQ, double leveraged. So it's going to have more concentration, so a little bit more risk, but it's going to have a little bit less leverage. It's going to be it's going to be that kind of tactical monster where these kind of things. TQQQ is great for a guy that doesn't have an options account or doesn't know how to trade options or doesn't want to mess with, picking the strike and stuff. Just buy TQQ, and hold it for a couple of weeks during the next bull phase. I would rather do the option trade myself, but I'm saying to each his own. TQQQ can help with guys that either don't want to mess with options or don't know how to do them. Anyway, it has a space, and I really like SQQQ for when you think the market's going to crater. That's triple leveraged inverse. All right, now speaking of that, let's talk about. I don't know if you guys remember. I think it was before I started doing the reviews on Patreon, but I reviewed. Yeah, it was, but I reviewed something and we need to check into it right now. It was called Q Up and Q Down. Who remembers those bad boys? Now, of course, it didn't have much history, so we really didn't know much, but Q Up might be a good comparison for Wild or TQQQ. So, but anyway, so Q Up, and in case you guys don't remember, I forget what they were doing. This was a wild fund. It's leverage, but I think they're going for weekly leverage or something. They had some kind of different variation on it. Well, I don't know. It doesn't matter. But anyway, they're monsters. I mean, look, they haven't been around a quarter yet, but for the month, they're up 20% total reach. I mean, they're just, they're monsters. Let's see what TQQQ is up for the month. Anyway, Wild should compare nicely with those. I really wish they'd bring out Wildy. In fact, I'm gonna tweet at them. I'm gonna tweet the link to this article so they could see it, and then and ask them why in the heck. I've thought about asking Brock to go look through the SEC database and see if they've applied for it. I wouldn't be at all surprised if it's applied for. It'd just be a natural, especially with Petrocelli and the title guys. That's what they do, Anyway, these guys all have their own experience. They have a lot of experience too. So, all right, TQQQ is up 2% in the last month. Where Q Up is up 10% in the last month. That's incredible. We can't look at Wild because it hasn't been around long enough yet. But I think it's going to be one of those kinds of funds, tactical upside fund. I don't know. What do you guys think? Marcus, what do you think? I'll check under the comments. Hey, Marcus just caught the stream. Going to have yeah. You watch it later, whatever. You didn't miss that much. Hey, also, I put a link to Patreon, and I wrote what I thought too. So anyway, I'm trying to just release stuff on Patreon too. Sometimes I just like to write stuff down, especially when I have stuff to show you guys, especially when I'm doing back testing stuff. Okay, so Q Up and Q Down. A good way to implement them. I think on those in this, I think I've read this before somewhere. On things that are triple leverage, don't use them for more than a week or two. I think I heard the guys on Tasty Trade say that. So use it like you would an option. I mean, when you think we're gonna go up for the next couple of weeks. Here's what I don't like about I've traded futures, I've traded stock index futures, stocks, options. I don't like anything that's a Delta One product. And I think Delta One I think that's what they call it. I'm trying to sound like I know what I'm talking about, but all that means is it's stock and futures are Delta One products, meaning they go down as much as they go up. Okay, now in options, that's not the case. You have asymmetry. When you buy a call, most you can lose is $100, but you can make $1,000, right? For me, the stocks are, even if I thought the market's going to go up, as I often do, I'll just go out there and get some Q calls or a Q call spread or something. But it's the same philosophy as getting Q up or Q down. So anyway, but yeah, maybe let's look at this, Marcus. Let's go look at the ES. Let's make a plan here. So I'll put over here in this window. I'm going to put the VIX. Boy, this thing's slow. Anyway, I appreciate you for sticking here. You guys will just watch this later. All right. What I was going to suggest is maybe just on something simple. You know, this is the kind of stuff that this is the way my mind works. When volatility's been going up for more than a month, in other words, just look at the crosses on this. This crossed on May 21st, and it's a bull cross for volatility, which is bearish for the market on May 21st. Well, anyway, then over here on May 28th, or say whenever it's been on the other side for at least a week, that resets it. Then when it crosses back under, when you get the bear cross for volatility, which would be the kind of the bullish sign in the market, you could maybe at that point you could go long 2 weeks and queue up or something. I don't know. Let's see how that would have worked. Let's pull it. Let's pull it up down here. So right here it crossed. You're at 587, and you just ride it until it crosses again, I guess. I mean, just, you know, I mean, so there it is, 587, and within like 10 days, it's at 603. I would have just got a call and done the same thing, but it's the same thing. But then at the same time, whenever it bear crosses, meaning volatility is going up again, if you do, Jackson, are you all right? If you do happen to still have it on, that'd probably be a good time to take profits and get, you know, take it off. Maybe even at that point, whenever you get something like this, you maybe want to get a little Q down. Now, Q down wouldn't have worked out all that well because the market's just dropped from 603 to 598 or something. But you know what I'm saying. But I'd say something. I would start with something like that. Use some kind of filter with volatility, and when you have a favorable volatility trend, you know, then maybe, you know, and there's all kinds of other ways you could do it too. You could use support and resistance. You could use moving averages, but I just like systems. Let me let Jax out. He's whining. I think he wanted to go visit. But that's, you know, that's something like I would start with. Boy, this last time the volatility bull crossed, which is bearish for the market. The market was closed actually. And the next day the market opened at 591, but within 2 days, the market was at 578. Now that's a trade you could make some money off of right there. You can get puts or get some Q down, or you could get some SQQQ. Or whatever, or you could just not worry about timing and just stay properly allocated, you know, or maybe stay properly allocated, maybe only stay 90% invested, keep 10% in cash, and then buy pullbacks occasionally. Or something. There's a jillion ways to do it. We're all trying to do the same thing: buy low, sell high, or buy high and sell higher. That's what I like to do. And so I think people sometimes forget that's a legitimate thing too. Let me show my door. Anyway. All right, guys. I hope you liked that video. Let's look at what the market's doing. I was a little bit concerned. You know, we have option expiration tomorrow, or it's actually, the market's not even open tomorrow. So option expiration is tomorrow as far as the market's concerned. Anyway, we have the day off tomorrow, so I'm going to sleep in. What about you guys? What are you guys doing? Q down reminds you of Y triple. Yeah. Now, the thing is, I believe Q down has leverage downside where Y triple Q can, you know, if it goes down too fast, can get maxed out or whatever. But it's still, you know, do you have any Y triple Q, Marcus? I cannot talk anyone else into getting that. And that's fine. But it's the greatest thing because what it hedges NASDAQ, And NASDAQ's what I have exposure to, because my bullish funds are ULTY, GPTY, and mainly NASDAQ tech stocks. So, I think a little 15 or 20%. I know I sure felt good. I loved on days when the market was cratering and I was up a little bit, or maybe just down a little bit, but where the market where the indexes were down 1.5 or something, and also the GDXY helped me out too. But I just like that. That's just kind of the way I like to do it. But anyway, all right. So there's 70 of you guys still here. Well, I really appreciate it. I'm just trying to make sure there's nothing else we can talk about. One other thing I do want to talk about, I drew this yellow line, I don't know, a long time ago. And tonight they came down and hit it to the T. Look what else it hit to the T. It hit right to the T where this prior gap was. There's this open area where there's got to be tons of buyers. I'm not the only one that looks at that. Other people do as well. And today, though, they were sure they were so far today. I don't know what Jackson's deal is, but anyway, obviously we're rooting for that wedge to hold. If that wedge gives up, in other words, if buyers aren't here, and at some point they won't be anymore, then I would think the first stop for bears should be 59.12 because there's a big trading range down there. Bears are going to want to get it lower than that, but that'd be a good place to aim if you were bearish for next Friday. Put on something for, next Friday. But if you're bullish, this is probably a good dip to buy. A lot of people bought this dip tonight. If you're bullish, a good thing to aim for would be maybe for next Friday for a new high for 6,100 or something. You could also do something, Marcus, or, we were talking about, well, you could also do some kind of system where you use Bitcoin as your trigger. And, it's always good to have it go the other way first for a while. So when Bitcoin's going down for at least, or whatever, but then when you get a fresh signal, the first signal after a while, like this one you got on June 6th, maybe you could use the Bitcoin trigger to at that point, when Bitcoin's blowing up, to buy Q up. Just the fact that the Bitcoin is and the NASDAQ are so heavily intertwined nowadays. But I like to use secondary indicators for this kind of stuff. Just confirming indicators. I guess that's about all I have. Does it concern anyone else that the Bitcoin doesn't look as bullish as ES? There's Bitcoin. Here's ES. ES is pushing on new highs and Bitcoin is not. If ES is where Bitcoin is, ES would be at 59.16. Okay, so which one? I mean, in my opinion, just kind of eyeballing it. And that is also the low from the 12th. Well, anyway, okay. So it may be one of them either is Bitcoin too low, because if the market goes on to make new highs, then Bitcoin probably will also. But maybe Bitcoin's leading the way and it's already made a high and it's pulling back and dragging the market with it. And we put in a little temporary high. I don't know. I'm 50-50 on if the high's in or not. I don't know. I mainly just wanted to show you guys the thing. So yes, Marcus, I inspired you to hold some. The percentage you use made sense. Oh, okay. So I have influenced one person. Also, you can knock the dividend for just holding. Yeah, you can't exactly. You can't, meaning you still get a dividend, right? Whereas if you do a regular, just one that's inverse but doesn't sell premium, then you don't make any premium money from it. But on these inverses, they only pay 20% and the other ones pay 40, 50, and 60. So you do sacrifice a little bit, but I think that I like it. I like it. I'm not worried about if the market goes up. If the market goes up, I'll be fine. I'm always just worried about if the market goes down. So, all right, guys. Well, thank you so much for being here. I can't believe there's still 8 of you here at 11 o'clock at night, but I really do appreciate each and every one of you guys. And hit me up in Discord if there's anything else we forgot to talk about, or we will talk in the morning. Well, I'm not going to do a morning show actually because the market's closed, but I'll be on at some point tomorrow, probably by noon or something. I'll show up. All right, guys. You take it easy. You have a great evening. I'll talk to you later.